All right, you're still tuned in to Market Pulse. Right now, we're spotlighting President Bola Tinubu's decision. He has approved the Nigerian National Petroleum Company Limited to use the 2023 final dividend owed to the Federation to cover the cost of petrol subsidies. The President has also approved a halt on the payment of 2024 interim dividends to the Federation to help boost NNPC's cash flow. NNPC has also informed the President that due to the subsidy payments, it is currently unable to pay taxes and royalty into the Federation account. This is what, we're going to be focusing on. And, they're calling this basically a subsidy shortfall, FX differential. We're going to have David Olujinmi, financial markets analyst with Nairametrics, to break this down for us. What do you make of these moves, David? And have we been able to verify the exact amount of dividend that would be withheld or put on hold?
So we've not been able to verify the exact amount because the audited financial statement or the NNPC's financial statement for 2023 is not yet out. But according to their statement for 2022, the year ending 2022, December 2022, they made a profit of about 2.5 trillion naira. That is, I'm not sure that amount is able to cater to subsidy for 2023. There's also a projection that NNPC should have made more money. We had oil price increases in 2023. We've had oil price around 86, 85, 80, between 80 to $85 per barrel in 2024, at least as at now. We've not been able to we can't say exactly how much NNPC has made because there's no data to that effect yet. NNPC has not released their 2023 financial statements.
Transparency. So considering NNPC's transition from a government-owned corporation to a limited liability and the prospects, we don't know whether it's going to happen or not, of a future listing of its shares on the NGX, and this should be in line with the PIA, could decisions have been made, could this decision have been made if it was listed on the exchange? And what does this move perhaps mean ahead for a potential listing?
So basically, this decision could not have just been made if it was a listed company, because now you have shareholders who you have to report to. You have people who want to get their dividends. This is a company that is making trillions of naira. If it was a listed company, this is the most profitable company in Nigeria. If it was a listed company, this company would probably have like half of the NGX market cap on its own, or probably all of the NGX market cap. Because this company should be worth at least $50 billion. I'm not sure. But one thing that is there is that if it was a listed company, we don't think they can pull this off. We don't think they can make a move such as this, which is why we feel like the government should come up with longer lasting solutions to subsidy.
Right.
If they know they are not able to cater to subsidy, then they should be able to come up with they should allow incentives like Dangote refinery function. Let us know if a price control is possible from us if we are able to produce our own petrol. So that is one thing that I feel like it's a case of
it'll be interesting to see how these decisions will be made if that company was listed on the NGX. But finally, before I let you go, I would like to get your overall assessment of this move, considering the trade-off in terms of government revenue, right, and the inability of the company now to pay taxes and royalties.
So one thing that is there is that government revenue is usually or should be targeted towards the people in the country, the individuals in the country. Naira, the petrol price is about, at least as of today, is selling about 800 naira per liter, 850 per liter in parts of the country. In some places, 900 per liter. That is a subsidized petrol price. Imagine not making this move and we begin to have petrol prices at 1,600. There is no amount of government revenue that can cater to the amount of inflationary pressure we'll be seeing on the economy. There's no amount of government revenue that will be able to cater to the kind of suffering that will be meted out to Nigerians. We cannot see government revenue solving the problems of hiking cost of goods and services that will affect the country. It's basically affect the macroeconomy of the country. So I feel like the trade-off is sensible when you look at it.
Okay, all right. I will see how this pans out and how reactions continue to roll in. Thank you, David, for that breakdown.
Thank you.